Hey traders, welcome to Quantsapp. My name is Varun and EOD based analysis is something that a lot of traders have difficulty to do. Now, why would traders want to do EOD based analysis when the market closes? So, a lot of traders are like me, I'm sure that you are as well, working professionals. So, when we are working professionals, we do not have our entire day or whenever the market is live, we cannot just sit in front of a screen. So for that, what a lot of traders still do is try to do some EOD based analysis and just spend some time on entries and exits on the next day. So generally positional trading is the style of trading preferred by these individuals. So today we are going to do just that. So we are going to learn a simple way of EOD based analysis, and on the basis of that we'll identify a trade setup or we'll try to set up some stocks for the next day, right? So index based trading is fine, but majorly when we are trading positionally, we need to be an opportunist trader because no one knows if Nifty or Bank Nifty tomorrow is going to be positive or not. But stocks have plenty of opportunities for you to trade on. So let us try to identify such cases. So let us start. So this is web.quantsapp.com. If you are in front of a screen, you can just log on to web.quantsapp.com, or if you're on Android, iOS, any mobile platform, we have a link in the description. It will be the first link in the description. So you can just go and register to Quantsapp if you are new. Let us start. So all you have to do is just search for cycle. Okay, you just have to go and search for cycle. So I'll just pull up the search option. Okay, just search for cycle. You will find, just a second, my bad. You will find Built-up Scrip Cycle. Now this is a tool that helps a lot of traders on their EOD based analysis because it is a very simple scanner that helps you identify the overall trend of the script of any stock actually. Okay, so how does this work? You can see that there are a lot of tiles with a lot of colors. So I'm sure that a lot of traders are familiar with the concept of built up. We have covered here plenty of times on this channel. But built up is nothing but a correlation between future price and futures open interest, right? So open interest is nothing but number of open contracts. So we do not know whether there is buying or there is selling. So in that case, what we do is we try to correlate futures price with the help of futures open interest. So let's say if future price is increasing along with futures open interest, that would indicate a long built up. If future price is decreasing and if futures open interest is increasing, that would mean a short built up. So on the basis of that, we can see where exactly people are entering with new positions, whether they are long positions or short positions, or if there is profit booking in the overall script. So that is how we use it. Now, if I just pull up the whiteboard real quick for you guys, whenever market moves up, does it move up like this? Or does it move up like this? How does a market move up? Number one or number two? If you guess number two, then you are correct. So whenever market moves up, we need to have such dips in the market. So these dips enable new buyers to enter the market or new traders to enter with fresh positions. Hence, market never moves like this. Market always moves like this in a simple pattern, right? So this pattern is created due to fresh long positions being added and existing long positions squaring off. So if I just have to simply mark it for you guys, okay, whenever there is fresh buying, market moves up. So futures price will increase, futures open interest will increase as well. Okay. Now, after some time, some of those buyers will think of booking profits. So they will start squaring off. So futures open interest will decrease and future price will slightly decrease as well. Now, if I am a trader, if I am new here on this particular script, I'll think of this dip as a buying opportunity. So I'll go and start adding more open interest, and because of those long positions, future price will also move up. Again, there will be some profit booking. Some people like me will start profit booking. This dip is a new buying opportunity. So this overall creates a healthy cycle. So long built up and long unwinding. is an overall bullish cycle that we normally follow. Okay. Now, similarly, whenever price falls down, okay, just a second. Whenever price falls down, it does not fall straight. It falls in a zigzag pattern, kind of like this. Kind of like this. So it's the same case. People are trying to go for those tops whenever they are selling. So fresh selling here, profit booking here. Again fresh selling here, profit booking here. Again fresh selling here, and so on and so forth. So this is short and short covering. S and SC, short and short covering. This is a very simple bearish cycle. All right. Now that this is covered, we will move on to the built up tool. Okay. So under built up, you can just select here. So we have 4 colors. So green is for long, blue is for long unwinding, red is for short, yellow is for short covering. This is something that we have already covered, but it's just there. Now we have color coded in such a manner so that you can easily identify by a visual representation where there is long unwinding, where there is short, and there is short covering. Okay. Now let's say if I want to filter some stocks that are in a bullish trend or a bearish trend, how do I do that? So you can see on the top left, look back period is 20 by default. Okay. Reading, we'll just switch it to long and long unwinding. So L-LU. And for count, I'll just set the count as 14. Now, why exactly am I selecting this particular number? Because I want out of the 20 days or the 20 last trading sessions, I want 70% of the times for the cycle to be followed. So out of the last 20 trading sessions, at least 14 trading sessions, the stock must experience long and long unwinding. So if any stock fulfills this particular criteria, it will show up. So I'll just click on apply on the top right. Once I click on it. So these are all the stocks that are following a long and long unwinding cycle. You can see Bank Nifty has shown up here. So Bank Nifty is also following a long and long unwinding cycle, which shows me that market overall is supposed to be positive. And you can see that today, even though Bank Nifty has fallen by around 1%, it was due to long unwinding. That means buyers booking their profits. So there's a good chance that more buyers will find this as a buying opportunity and Bank Nifty can go up from here. Okay. So these are all the stocks. We have Dal Bharat, we have Dixon, we have Aisha Motor. So alphabetically you can find these. If you want a particular sector, you can find a particular sector here as well. Right? Any sector you want. Let's say if I just want auto sector. So inside auto sector, only Aisha Motor is following this cycle. And that is how you can analyze these things. Let's say if you want to go for a bearish trade. Now overall the market is on a bull run, but that does not mean that none of the stocks are falling down. So for that you can just go to reading and select short and short covering. So the overall healthy bearish cycle is something that you can follow. Just click on apply. These are all the stocks that are following a short and short covering cycle, right? So this is how you can analyze these things with much more efficiency. Now, how do I know which stock to pick out of these? How do I know which stock I should pick out of these? So for that, I have a very simple tool for you guys to identify where writers are getting trapped. Now I know that these stocks are following a trend. Who knows whether the trend will continue? No one knows. I do not know whether the trend will continue out of this. For that, we have a very simple scanner, or you can call it a filter as well. We have the trap indicator. It's our own quant model. So you just go to the trading section. Under quant models, you will find trap indicator at the last. So just open this. This is a tool that helps you identify where exactly writers are getting trapped. Right? So it just shows you where exactly writers are getting trapped. So there are two types of signals. One is a call writer's trap, one is a put writer's trap. Okay. Now out of these, you can pick a stock, right? You can pick any stock. So you can just go to filter by date. I'll just select today's date. So these are all the signals generated today. You can see as per the date, these are all the signals generated today, right? There are quite a few signals. So this is where writers are trapped. So let's say, for example, we see Wipro. Wipro is showing a put writer's trap. That means Wipro is actually trapping the put sellers. So Wipro might be following a bearish trend. So we can confirm this with the help of built-up cycle. We can just set up short and short covering, or what I generally like to do is I just like to select whatever is there. So I'll check firstly whether there are more signals on the call writer's trap side or whether there are more signals on the put writer's trap side. So you can go out of those. But if there are signals like these, let's say if I just want to go for only the signals that are for call writer's trap. So these are all the signals for call writer's trap that have been generated today. Out of those, I'll just select which stock is coming up under the built-up cycle list, and then I can enter a simple trade. All right, so that is how you can use these things. It's quite simple actually, it's not that difficult. Let's say if I want to identify a couple of stocks, I guess Hindustan Unilever was following a trend. So let's check out Hindustan Unilever. Again, we'll go to track. Under track, you can see built up script symbol. Here we have the cycle. You can directly search for cycle, but you can find these as well. Okay, long and long unwinding. Let's try to identify a couple of stocks for a trend. Okay, 20 and 14. We'll just click on apply. Okay, let's see what is going on here. So we have Hindustan Petroleum, we have, so these are the scripts that we have. So you can just open another tab and you can identify all of these. So we can actually check which stock is following a particular trend. Okay, so we can just go and check out all of these manually as well if you want. So let's see, you can keep a list of this in your mind. You can just note all of these down and then you can go and search for trap indicator. So let me just memorize a couple of these here at least. So we have Dal Bharat, we have Dixon, Aisha Motor, GNFC, Granules, Hindustan Petroleum, Voltas. Okay, let's see how good my memory is. Okay, so filter by today's date, call writer's trap, and we'll go by symbol. Okay, Biocon Britannia. Okay, Granules was there. Granules, you can go for a trade on Granules. Okay, there are a lot of trades. Zydus Life was there. Zydus Life Sciences was there as well, right? What else? I guess that's it. So at least I found two stocks that I can go for a trade in. At least Granules was there and Zydus Life Sciences was there, right? If you want to search for some older signals, you can search for those as well. Like for example, if I want to see Bank Nifty signal, let me see if Bank Nifty has signal. Okay, so Bank Nifty signal was there. Bank Nifty signal was generated on the 3rd, right? You can see around at this price. Currently, it is at a smaller price, right? Since market has fallen today, but there is a good chance that Bank Nifty could bounce back from here, as we saw in built-up cycle. Okay. Now, what sort of strategy can you implement for these trades? So obviously, on the next day when the market opens, you will enter these trades. Since trap indicator provides a signal one day prior, right? So if I select filter by date, if I select today's date, those are the signals for the next day. So I'll analyze built-up cycle with the help of this and I will enter a trade on the next day. Now, what sort of strategy should I go with? So generally, I recommend if you are going for the first week of expiry, if you are trading the monthly expiry, obviously you are going for a stock-based trade, so you will go for a monthly expiry. If you are going for trade in the first 15 days of the expiry or the first half of the expiry, in that case, you can go with debit spreads, which are obviously always recommended, since they protect you from theta and overall delta is in your favor, which is a Greek that is based on direction. Secondly, if you are trading in the second half of expiry, let's say in the next 15 days of the expiry, in that case, I always go for credit spreads, which is the best thing there because it helps you with theta. It actually gives you a bigger theta than a debit spread, and then after that, you can trade based on that. Okay, so at the end of the day, we are trading direction. And after direction, we can actually identify what is going on. So you can just go to architect. In case if you don't know what these strategies are, just go to options architect. Okay. Under architect, you can find bullish and bearish. So just select any of these that you want. And you can see here, bull call spread, bull put spread. So bull call spread is a debit spread. Bull put spread is a credit spread. And under bearish, you can just select. Here you can see bear call spread and bear put spread. So in this case, bear put spread is a debit strategy and bear call spread is a credit strategy. You can just click any of those and you can see what to do. Right here you can see net credit is in positive. So this is a credit based strategy. You can see an expensive call option we are selling and a slightly less expensive call we are buying as a hedge. So this is the payoff that you can see here. That is how you can identify some strategies as well. All right, so that is it for me. I hope you guys enjoyed. All the best on your trading journey. I will see you guys very soon in the next video. If you need any help with regards to Quantsapp or trading in general, we have a helpline number on the top right corner. You can find it right here, and we will definitely try to help you out. So the support agent will always be there. They will help you out further. Okay. Thank you so much, guys. Thank you so much for spending this time with me. I hope you guys are liking this particular series that we're doing. All the best on your trading journey. I will see you guys very soon. Thank you, guys.